Okay, let's dive in. When you hear Capitol Hill, you probably think, politics, maybe those iconic buildings, the news.
The dome, the Supreme Court.
Exactly. But what if I told you that behind all that, there's this incredibly dynamic, high potential real estate market for investors?
It's absolutely true. It's easy to just see the political side, but, well, walk around those streets.
Mm,
Those lovely tree-lined streets.
yeah.
And you find this really desirable residential neighborhood. And for investors, that mix, it creates unique opportunities, but also, yeah, some specific challenges you really need to get your head around.
Right. And that's exactly what we want to do today. Cut through the noise, give you that deep dive into what really makes Capitol Hill real estate tick, from an investment angle. We're going to unpack the market's surprising speed, break down the costs, the returns, look at the strategic advantages. Some might be hiding in plain sight, and peek at what's coming down the pike.
Yeah, get you armed with the insights you need.
It's about getting the real picture, right? The brick-and-mortar reality, kind of far removed from the debates happening nearby.
Exactly. The inside scoop, if you will.
Okay, so let's jump in. You said dynamic. What makes Capitol Hill so compelling beyond the politics? Why isn't it just, a place tourists visit?
Well, it's that layered thing, isn't it? You've got the incredible stability, the prestige, being the heart of the nation's capital. That provides a solid foundation for property value.
Okay, a bedrock.
Right. But then you layer on top of that this immense residential charm, the architecture, the old trees, that real community feel.
Oh,
And that combination, well, it makes it surprisingly resilient, even when the wider economy feels a bit shaky. And it offers genuine potential both for value growth and steady income.
resilience and income. Sounds like it could work for quick flips and longer holds.
Exactly right. The demand is just inherent there. So doing value add renovations, putting money in to upgrade a place, that can bring pretty significant returns pretty quickly.
Yeah.
And that same demand, it translates into a very strong, very reliable rental market too. So yeah, fix and flip, buy and hold, both can work really well. But you got to understand the pace.
Okay, let's talk about that pace then. Because when I picture a historic neighborhood, I don't automatically think fast-moving market. What's the data actually show?
Yeah, this is often the first big surprise for people. Despite that historic feel, Capitol Hill is a fast market. Properties, they typically spend only about, say, 25 to 35 days on the market before they go under contract.
Wow, wait, under 35 days. That's way quicker than most places, isn't
Yeah.
it? The national average is more like, what, 55, 65 days?
Right, significantly faster. And that speed, that's your first major clue about just how strong the buyer demand really is. It tells you, look, this isn't a market where you can afford to hesitate.
Okay.
Investors need to be prepared. Competition is, well, it's fierce.
So for an investor listening, that means if you find something good, you have to be ready to pounce, like instantly.
Precisely. Speed is absolutely king there. If you're trying to use traditional bank financing, you know how that can drag on for weeks, sometimes months?
Yeah, the paperwork.
Exactly. You're probably going to miss the best deals. And this is really where having alternatives like pre-approved financing, especially something like a hard money loan, becomes, well, essential.
Okay, hard money loan. Just quickly, for anyone less familiar, that's basically a short-term loan, right? Often based more on the property's value, and it's all about speed.
That's the core of it. It lets investors close really fast, sometimes in a week, maybe even less. And that gives you a massive edge when you're up against multiple offers, which happens a lot there. It's a tool built for that kind of competitive environment.
Got it. Speed is key, and you need the right financing for it. What about appreciation? It's an established area, but are values still climbing?
Oh, absolutely. Capitol Hill has shown really consistent, very healthy appreciation. On average, you're looking at around 4% to 6% per year.
Okay, 4 to 6%, not like crazy boom growth, but steady. And probably better than a lot of national markets that might jump around more.
Exactly. That steady climb is powerful. For fix and flips, that upward trend helps protect your profit margin, right? And for buy and hold investors, that 4-6% compounding year after year, that builds serious equity over time. It also makes these properties look really good as collateral for asset-based lending.
You mean loans secured primarily by the property itself?
Correct. Lenders definitely favor markets with that kind of reliable appreciation. It reduces their risk.
Okay, so fast deals, solid appreciation, key indicators.
Right.
But owning property in a place like D.C., it's got to come with higher costs too, right? What about something like property insurance?
You're spot on. Operating costs are definitely higher. Property insurance, for example, on a single-family home in Capitol Hill, You're typically looking at maybe $1,200 to $1,800 a year.
Okay, 12 to 1800. How does that compare nationally?
It's about 15–20% higher than the national average, roughly.
That's not insignificant. You definitely need to factor that into your calculations.
Absolutely. These costs, they directly hit your cash flow, especially if it's a rental. And this is why, working with a lender who really gets the local market, someone like Jaken Finance Group, is so important
Why is that?
because they understand these specific DC costs. They build them into their underwriting, their loan-to-value calculations, their debt service coverage ratios. Basically, making sure the numbers work with the real costs on the ground. They know what it actually costs to operate a property there.
Right, they're not just using some generic national average. They know the
Right.
DC specifics. Okay, so higher costs, but presumably higher income potential to offset that. What's the rental market like?
Now, this is where Capitol Hill really shines for investors. The demand for rentals is just huge, driven by location, demographics, and it pushes rental rates way up, premium rates.
Okay, let's talk numbers then. What kind of rent can an investor realistically expect?
Well, for, say, a one-bedroom unit, you're typically looking somewhere in the range of $2,400 to $3,200 a month.
2400 to 3200 for a one bed? Wow.
Yeah, and for bigger places like a three-bedroom house, rates often run from $4,500 up to $6,000 per month, sometimes even higher depending on the specific.
$4,500 to $6,000 a month? Those are serious numbers. That must create fantastic cash flow potential.
It really does. These premium rents are a massive driver for profitability. It makes strategies like aggressive rehab loans, where you borrow more to really renovate a property to get those top-tier rents very viable,
Okay.
or other value-add plays. You can justify sinking significant capital into a renovation because you know the potential rental income on the back end supports that investment. You get strong cash flow almost immediately.
That makes total sense. The income justifies the upgrade investment. You mentioned demographics driving those rents. Who is living in Capitol Hill? How does that affect the investment picture?
Well, the cost of living there is high, no doubt about it, probably 50–60% above the national average.
Which sounds like a drawback.
But for investors, it's actually kind of a positive signal. It reflects how desirable the neighborhood is, and it acts like a filter, attracting a very specific high-income demographic.
So the high cost isn't necessarily bad for investors. It actually signals a stronger tenant base.
Precisely. It means you're tapping into a pool of tenants who can comfortably afford those premium rents, and they're often very stable tenants. The demographic data shows this clearly. You've got high-earning professionals, many tied to government, law, lobbying, that sort of thing. Median household incomes are over $130,000.
Over 130K, that's what, nearly double the national average?
Pretty much, yeah.
Having a tenant base with double the national average income. That sounds incredibly stable for a landlord.
It's a huge advantage. For investors, it translates to reliable rent payments, lower vacancy rates, generally stronger tenant profiles, and that stability. It reinforces the market's strength for lenders, too. Properties with that kind of income stream, good tenants, they're seen as excellent collateral for asset-based loans. It just lowers the risk profile all around.
Okay, so the high costs and strong demographics create this solid foundation. Beyond just, buying and renting, what are the strategic angles? What makes Capitol Hill unique from an opportunity standpoint?
Well, location, right? It's still paramount. You're literally minutes from the Capitol building, the Supreme Court, Library of Congress. You're right there. That proximity has inherent value.
And it's known for being super walkable, isn't it?
Extremely walkable. Its walk score is 98. That's one of the best anywhere, especially around the Eastern Market area. That's like the vibrant heart, shops, food, community feel. It really anchors the neighborhood and boosts that walkability factor.
Does that walkability translate into actual dollars, like higher property values?
Oh, absolutely. You can quantify it. For instance, homes just a few blocks from the Eastern Market Metro Station, they consistently sell for, say, 15–20% more than similar properties just a bit further away.
15 to 20% premium just for being near the metro and the market? Wow.
Yeah, that convenience factor commands a real premium.
What about the houses themselves? Those beautiful old row houses, Victorian federal style. Are they just nice to look at, or is there an investment play there?
Oh, they're a major strategic opportunity. They command premium prices just because of what they are historically. But crucially, they offer huge potential for creating value through renovation. Investors who are willing and able to do those sensitive quality renovations, they can often see returns of like 20–30% just on the renovation budget itself.
That makes perfect sense for a fix and flip strategy then.
Definitely. And tied into that historic character is another advantage: limited supply. Because of the strict historic preservation rules, building brand new, ground up construction is really rare.
Right. You can't just tear down and build a modern block.
Exactly. So you have this inherent limit on supply facing really high demand. That's just classic economics driving prices up over time.
Limited supply, high demand, the investor's dream combo. And the metro access you mentioned.
Yeah, transit-oriented development is huge there. Several metro stations make Capitol Hill incredibly connected, not just for downtown commuters, but for people who want that car-free lifestyle, which broadens the appeal, especially maybe to younger professionals, boosts demand even more.
So even with all the history and preservation, there are still ways to add value. Development or renovation type strategies.
Absolutely. While wholesale demolition is rare, there are tons of older row houses that haven't seen an update in decades. They're perfect canvases. Ideal for fix and flip investors using, say, bridge loans to get in, renovate fast, and get out.
Okay.
And you see creative stuff too, like pop-tops adding a whole new floor while keeping the historic facade intact, or converting basements into separate units, or just more living space. These add serious square footage and value, all within the existing structure's footprint, more or less.
So the market actually rewards that kind of creativity as long as it respects the historic context.
Interesting. Looking ahead now, are there any big external things happening that might boost Capitol Hill even more? Yeah, there are several major projects acting as sort of future growth catalysts. You've got the Capitol Crossing project nearby. That's like a $1.3 billion development, adding office space, luxury residential, bringing more high-income folks right into the vicinity.
More density, more demand here.
Exactly. Then there's the Navy Yard expansion just to the south. That's having a spillover effect, definitely pushing up appreciation in the southern parts of Capitol Hill as demand radiates outward. And even though Amazon HQ2 is across the river in Virginia, its presence is creating this regional housing squeeze across the whole DC metro. And neighborhoods like Capitol Hill close in, super desirable, they benefit significantly from that increased competition for housing.
Okay, so a mix of very local development plus broader regional growth sounds like strong tailwinds for the market. It's really clear Capitol Hill offers this unique blend: history, desirability, strong fundamentals. So how critical is having the right financing partner to actually capitalize on all this?
Oh, it's not just helpful, it's essential, given everything we've talked about, right? The speed you need, the potential for high returns on renos, needing to act fast in that competitive market, the specific strategies like flipping or value-add rentals. The right financing is literally what enables you to do it effectively. You absolutely need a lender who gets these specific dynamics.
And that's where a specialist lender, like you mentioned, Jaken Finance Group, comes into play.
Precisely. A lender like Jaken Finance Group, they specialize in this DC market, including Capitol Hill. They understand the nuances. They offer those fast, flexible, hard money loans designed exactly for situations where speed is everything.
Because if you can't close fast, you just lose the deal. Simple as that.
Exactly. They have that deep local knowledge, DC trends, the real costs we talked about, the types of renovation projects that work here, and that lets them structure the financing, whether it's for a flip or buying a rental with competitive rates and terms that actually align with the opportunity. And a huge piece is their closing speed, often as little as 5 to 7 days.
5 to 7 days. That is incredibly fast compared to traditional banks.
It is. And in Capitol Hill, where winning a bid often boils down to who can close fastest and with certainty, that quick turnaround is a massive competitive edge. It lets investors make strong, confident offers knowing they can deliver. That kind of local expertise and speed really makes a lender like Jaken Finance Group a vital partner if you're serious about succeeding there.
So it sounds like in a market that's defined by speed, history, and really high demand, having financing that can match that pace and understands the local details. It's not just a nice to have, it's basically a strategic requirement.
Absolutely. It's the difference between spotting an opportunity and actually being able to seize it.
What a fascinating deep dive. We've really seen that Capitol Hill is so much more than just its political image. It's a market with surprising speed, consistent appreciation, those premium rents driven by strong demographics, and really unique strategic plays, especially around renovating those historic homes.
And grabbing those opportunities, it really demands not just knowing the market, but having the financial tools, the right lender, that's just as agile and informed as the market itself.
It really makes you think, though, considering Capitol Hill's unique mix, deeply historic, yet also incredibly dynamic with these strong demand drivers and ongoing development. What other neighborhoods, maybe ones that seem sort of set in stone or established in other cities, might actually hold similar, maybe untapped potential if you really dig beneath the surface? If you look closely at the underlying market and demographic shifts, that's definitely something for investors to ponder.